Cryptocurrency has taken the financial world by storm, offering potential for high returns but also carrying significant risks. Whether you're a seasoned investor or a newcomer to the world of digital assets, here are 5 crucial tips that can help you navigate this volatile landscape. But before we delve into those, there's something you need to know that's a game changer. What if I told you there's a new cryptocurrency emerging? One that could redefine the entire market and make all your previous knowledge obsolete. Welcome back to the Cryptoholics Corner, your hub for all things crypto. Let's dive into the world of cryptocurrencies, where we uncover insights, share news, and demystify the complexities of this exciting frontier. The crypto universe is vast, and together, we'll navigate its depths. The world of cryptocurrencies is booming and changing faster than ever. Thanks to cool advancements in blockchain technology and a whole lot of interest from big institutions, the crypto market has gone through some wild growth recently. The total value of all cryptocurrencies is now over $2 trillion, and just my Bitcoin itself is worth more than $1 trillion. But before you start thinking about all the money you could make, remember, the crypto world isn't all rainbows and sunshine. It's super volatile, which means prices can swing wildly and you could lose money real fast. Plus, it's like the Wild West out here. There's not a lot of rules and regulations in place yet. So, how do you navigate this roller coaster ride of a market? Well, you've got to gear up with the right knowledge and strategies. That means understanding how the tech works, digging into projects to find the good ones, and having a solid plan for your investments. Today, we're going to dive into 5 essential tips that every crypto investor should have in their playbook. Stick around, because following these tips could be your ticket to success in this exciting yet unpredictable world of cryptocurrencies. Our first essential tip: margin trading risks. When it comes to margin trading, there are a few important things to keep in mind. Number 1, increased losses. One of the things you need to know is that margin trading can magnify both your gains and losses. If the market doesn't go your way, you might end up losing more than you initially put in. Imagine having a margin ratio of 10 to 1, and the asset's price drops by 10%. That could result in a whopping 100% loss. Number 2, liquidation. If your losses start to outstrip your margin balance, things can get dire. Your position could face liquidation, which means the exchange will sell your assets to cover the losses. This process can be swift and you risk losing all the capital you've invested. Number 3, margin calls. Falling below a certain margin balance can trigger a margin call, essentially a request from the exchange for more funds to be deposited into your account. If you can't meet this call, you risk liquidation of your position. Number 4, psychological stress. The psychological aspect is a big deal too. Margin trading can be nerve-wracking, and the fear of losing money might lead to impulsive and unwise trading decisions. It's crucial to realize that margin trading isn't suitable for everyone. You need to understand these risks before diving in. If they make you uncomfortable, it might be best to steer clear of margin trading. Our next and second essential tip: pump and dump schemes. They're basically a trick way some folks manipulate the stock market. What they do is, they talk up a stock with a lot of hype and positivity, not because it's genuinely great, but so they can sell it at a higher price. Now, in the world of cryptocurrencies, these schemes often go down like this. First off, these skimmers buy a boatload of dirt cheap cryptocurrency. Next, they start a rumor mill, often on social media or online forums. This then hypes up the cryptocurrency like it's the next big thing. People start buying into this hype, driving up the price, and as soon as the price hits a certain level, the schemers cash out, causing the price to nosedive. The poor folks who bought in during the hype are left with almost worthless coins. So, how can you spot these sneaky schemes? Look out for some warning signs. You can spot them through if a coin's price suddenly shoots up for no obvious reason, or when social media is flooded with glowing posts about a particular coin, or if it's hard to find a buyer for that cryptocurrency, or when those behind the scheme hide their identities and holdings. And if you see these red flags, just steer clear of that cryptocurrency, alright? The best way to stay safe from these pump and dump games is to do your homework, and remember, investing in crypto is like the Wild West. Be careful out there. Our third essential tip is to watch out for unsolicited investment advice. In today's world of social media, we're all more connected than ever. That also means scammers have an easier time reaching out with unsolicited investment tips. These folks might pretend to be financial experts or dangle exclusive information on seemingly amazing investment opportunities. But hold on a second. Their intentions are far from noble. They want to swipe your hard-earned money. Let's look at the warning signs to keep an eye out for when it comes to unsolicited investment advice. Number 1. Guaranteed returns. Really? Nobody can guarantee returns when it comes to investments. If someone is making such promises, it's a big red flag that they might be up to no good. Number 2. Are you feeling rushed? Be cautious. If someone's pushing you to make quick decisions, it's a sign they're not looking out for your best interests. Number 3. Personal info? Keep it safe. Never ever hand over personal information like your bank account or credit card numbers to someone you don't know. Number 4. Inside information is a no-go. Insider trading is illegal. If someone's offering you insider info, they are likely trying to trick you. Now, if you find yourself on the receiving end of unsolicited investment advice, remember this. Always do your homework before making any moves. Check out the person offering advice. Look for those red flags, and if you're not sure about an investment, chat with a financial advisor. It's a smart move. Number 4. The tax side of crypto trading. When it comes to taxes and cryptocurrency trading, it's a bit of a mixed bag, and it largely depends on where you live. Different countries have different rules, and it's essential to know how they affect your crypto gains and losses. Let's talk about the first, capital gains tax. In many places, including the United States, cryptocurrency is treated like a capital asset. What this means is that when you make money or lose money by buying and selling crypto, you might owe capital gains tax. If you're in the 10% or 12% income tax bracket, your crypto gains might actually be tax-free. Folks in the 22 or 24% bracket usually pay a 15% capital gains tax. And if you're in the 32%, 35%, or 37% bracket, you're looking at a 20% capital gains tax. So, your tax rate depends on how much you make in total, not just from your crypto adventures. Number 2. Additional taxes. Keep in mind that apart from capital gains tax, there are other taxes to watch out for. For instance, if you're into cryptocurrency mining or staking and make some income from it, you might also owe income tax or self-employment tax. It can get a bit complex. Number 3. Record keeping is key. To navigate this crypto tax maze, you'll want to keep meticulous records of all your crypto transactions. This is important for properly reporting your crypto dealings on your tax return. Make sure you note down details of everything, from buying and selling crypto to any special events like airdrops, forks, or hard forks. Our last tip: don't invest more than you can afford to lose. Remember, when it comes to cryptocurrency, it's crucial not to put in more money than you can comfortably part with. Cryptocurrencies are notorious for their wild price swings and unpredictability. So, make sure you never invest funds you rely on for your day-to-day living expenses or critical financial commitments. The golden rule here is to only put in money that you're willing to let go of without putting your financial stability at risk. By following these 5 essential cryptocurrency investment tips, you can increase your chances of success in the cryptocurrency market. Thanks for joining us again. We hope you've gained valuable insights and knowledge that will empower you in your crypto endeavors. Don't forget to like this video and subscribe. Also, click that notification bell to stay updated. Until next time, keep exploring, keep learning, and keep prospering in the fascinating realm of cryptocurrencies.